Imagine a world where every transaction you make, every penny you spend, is tracked, traced, and controlled by your government. Welcome to the era of Central Bank Digital Currencies, or CBDCs, and China's Digital Yuan. As we navigate through the digital age here on Cryptic Mystic Vault, we are seeing a shift in the way money changes hands, from tangible cash to intangible digital currencies. CBDCs are a new breed of currency, designed and issued by central banks with the promise of increasing efficiency and reducing the cost of transactions. Leading this digital frontier is China, with its Digital Yuan, the first major CBDC to be put into circulation. But while this innovation may appear as a step forward in the world of finance, it's not without its drawbacks. With this digital leap forward come a host of concerns and risks that require our attention. CBDCs give governments unprecedented control over their economies and potentially over your financial life. Imagine a world where every transaction you make, every cent you spend, is watched and recorded in real time. This is the reality with central bank digital currencies. They offer the capability for governments to monitor all transactions as they happen. This level of oversight could lead to more efficient taxation and prevent fraud, but it also poses a significant risk to personal financial freedom. It could mean the end of cash transactions and the privacy they provide. It could also potentially lead to a scenario where governments have the ability to freeze or seize assets directly, bypassing the need for legal processes that currently provide checks and balances. The control aspect of CBDCs is a complex issue with far-reaching implications. It's a balancing act between effective economic governance and preserving individual liberties. The power to monitor every transaction in real time is a double-edged sword. CBDCs are programmable, giving governments the power to dictate how and when money can be spent. This programmability is a double-edged sword. On one hand, it can streamline transactions and increase efficiency. But on the flip side, it has the potential to impose constraints on personal financial freedom. Imagine a world where your money comes with a set of instructions dictating where, when, and how you can spend it. What if your government decides to stimulate the economy by programming the digital currency to be spent only on certain goods or services? Or what if they set your money to expire if not used within a specific timeline? The idea might sound far-fetched, but with programmable money, it's a real possibility. It's a radical shift from the traditional concept of money as a neutral medium of exchange. Imagine your money expiring because you didn't spend it on time. That's the power of programmable money. The traceability of transactions with CBDCs raises serious privacy implications. Imagine a world where every purchase you make, every dime you spend is meticulously tracked. This isn't just a concern for those with something to hide, but for anyone who values their privacy. With central bank digital currencies, such a world could become a reality. The digital nature of these currencies allows for an unprecedented level of surveillance. Every transaction, large or small, could be monitored and recorded. You might be thinking, well, don't they already do that with credit cards? Yes, but with CBDCs, the potential for scrutiny is far deeper and more invasive. This could effectively eliminate financial anonymity, an aspect of personal freedom that we often take for granted. The implications are staggering. Could this lead to mass surveillance on an unprecedented scale? Could it result in a loss of personal autonomy in our financial lives? Your financial life laid bare for all to see. That's the risk we face. With CBDCs, governments could restrict individuals from accessing funds or making transactions. This statement brings us to the heart of one of the most prominent concerns surrounding CBDCs, the potential for financial censorship. Imagine a scenario where you're an outspoken critic of a particular government policy. With CBDCs, the government could potentially freeze your digital wallet, limiting your ability to transact, as a way to suppress dissent. It's not just about political action either. Social behavior that doesn't align with the government's agenda could also lead to financial restrictions. In essence, CBDCs could provide governments with a powerful tool to enforce compliance among citizens, potentially infringing upon our financial autonomy. This is the dark side of the digital revolution in currency. It's a scenario where your money is still technically yours, but its usage is dictated by someone else's rules. Your money, but not always at your disposal. CBDCs require a digital infrastructure, excluding those without access to technology and exposing us to cyber attacks. This is a crucial point to consider when we talk about the digitalization of currencies. Central Bank Digital Currencies, or CBDCs, necessitate a robust and secure digital infrastructure. But what happens when that infrastructure fails or is compromised? The dependence on technology also creates a digital divide. Not everyone has access to the necessary technology or the internet, which could leave a significant portion of the population excluded from the financial system. Moreover, the risk of cyber attacks is ever present in the digital world. If a country's digital currency infrastructure were compromised, the consequences could be devastating. There's also the potential for technical failures. Systems can go down, glitches can occur, and in those moments, access to your money could be cut off. It is a sobering thought. In a digital world, your money is only as safe as your technology. The potential dangers of CBDCs demand our attention, with personal freedoms and privacy at stake. As we've seen, the advent of these digital currencies ushers in a new era of economic control. Governments gain an unprecedented level of oversight over transactions, potentially reaching into the financial lives of their citizens with real-time monitoring abilities. It's a level of control that can extend beyond mere observation, with the programmable nature of CBDCs potentially dictating how and when money can be spent, or even setting money to expire. This raises serious questions about personal financial freedom. Moreover, the traceability of transactions could lead to mass surveillance, threatening anonymity in financial matters, and potentially breaching our right to privacy. There's a risk of financial censorship, too, with governments potentially restricting access to funds or transactions based on social or political actions. There are technological concerns as well. CBDCs require a robust digital infrastructure, and those without access to technology could be excluded. Not to mention the system's vulnerabilities to cyber attacks and technical failures. CBDCs could also be used to manipulate economic behavior, incentivizing or discouraging certain types of spending. This, along with the potential marginalization of traditional banks and financial institutions by state-controlled digital currency, could have far-reaching impacts on our financial landscape. Internationally, the geopolitical risks of CBDCs are significant, from the potential for economic sanctions to exerting financial pressure on other nations. At the socio-economic level, the implementation of CBDCs might exacerbate inequalities if not carefully managed. These are not theoretical concerns. Real-world examples, such as China's Digital Yuan, already illustrate how these dangers could manifest. Yet, it's also important to consider arguments from proponents who argue for safeguards and regulations that could mitigate these concerns, offering a balanced view. In the face of this digital evolution, we must safeguard our personal freedoms and privacy. As we move forward, it's imperative to engage in informed debates and make conscious decisions about how we approach the adoption of this technology. It's time to engage, learn, and participate in the conversation about CBDCs. The world is at the brink of a financial revolution, a shift that could reshape the very fabric of our economic systems. Central Bank Digital Currencies, or CBDCs, are no longer a matter of if, but when. As we stand on the precipice of this new frontier, it's crucial that we don't just watch from the sidelines. Get informed. Understand the intricacies of CBDCs, from their potential benefits to the serious concerns they raise. Dive deep into the implications of programmability and expiry. Ponder upon the privacy and surveillance issues, the potential for financial censorship, and the risks born from our dependence on technology. Reflect on the potential control and manipulation of economic behavior, the impact on traditional financial institutions, and the international and socio-economic implications. Consider the case of China's Digital Yuan and the lessons we can draw from it. But don't stop at understanding. Engage in active discussions, share your insights, voice your concerns, and challenge the viewpoints you encounter. Be a part of the dialogue that shapes the policy and safeguards around CBDCs. Remember, the decisions made today will shape the financial landscape of tomorrow. Reach out to your representatives. Advocate for transparency, privacy, and autonomy in the design and implementation of CBDCs. Demand strict regulations to prevent misuse and to protect individual rights. Every voice matters in this conversation, and your voice can make a difference. Finally, be proactive. Embrace this digital transformation, but do so responsibly. Make sure you're not just a passive participant in this revolution. Instead, be an active player, shaping and directing the course of this change in a way that aligns with the principles of freedom, privacy, and fairness. The future of your money is digital, but it's up to us to ensure that it's also secure, private, and free. Let's work together to make sure that the digital currencies of tomorrow serve us rather than control us.